Welcome to Study Time, a televised home learning program produced by Rwanda Basic Education Board.
How are you, learners? I'm happy to meet you once again. Let me hope you are doing well. I'm your economics teacher, Anton, and today we are going to continue with Unit 11, and that is production. Our lesson shall go on lesson 4, that is capital. I'm going to look at capital as a factor of production. But today, we set our learning objective. By the end of that lesson, you should be able to explain the factors of production, but specific, is going to be capital. You will be able to tell us the factors of production, but specific, we are going to look at capital. Remember, in our previous work, what we looked at? We looked at factors of production, but we looked at, you can tell me what we looked at? Good. We looked at land as a factor of production. Now we are going to look at capital as a factor of production. So you remember, last time we looked at land as a factor of production, and we looked at some of the characteristics. Could you remind me some of them? Some of the characteristics that we looked at? Good. We said that land is a free gift. Land is mobile. Good. Land is fixed, right? Land is also paid. It's also paid for. That's good. Then we went on and looked at some of the types of rent. Could you also remind me some of them? Good. We looked at equity rate, transfer earnings, economic rate, right? I'm happy that you still recall, you still remember what we looked at in our previous lesson. So today, let's go straight to capital. Let's look at capital as a factor of production. So who can tell me what is capital? If you hear capital, who can tell me what capital is? Capital, some say the money to start a business. Can't it be? You are going to start a business, that is Good. So we say capital refers to all man-made resources used in the production of goods and services. All man-made. If I talk of man-made, what do I mean? Man-made. Because you have a word here, money, made. Money. Things that are made, that are artificial, that are made by man. We said that land, it is nature, God made. But here, man made in terms of capital. So under capital, we are going to look at categories. We have fixed capital, then we shall also look at liquid capital, then we look at human capital. First, we know one capital, the money to start a business. They tell you that now, what are you going to do? I want to start up a business, a grinding mill for maize, but I don't have capital. So here we have fixed, liquid, and human capital. Who can tell me what do you understand by fixed capital? Fixed capital, if you hear that something is fixed. Okay, those who do business, you know fixed assets. If I talk of fixed assets, that capital which is there, that is, when it helps to run the business, that is fixed. For instance, the premises you are renting, or the house you are renting, that is a fixed capital. The equipment that you have, that is also a fixed capital. Good. Now, you can see some of the examples I tried to get. So, some of the examples, we talked of buildings, we talked of equipments. As you can see, have buildings, equipments, the vehicles, furniture, fittings. So this is what we call a fixed capital, stock of real assets in the business. So when you are going to start up a business, you hire a building, you put there equipment. If it's office, you put office equipment. Then you have to get vehicles that will be taking all workers, or that will be taking equipment. Then furniture, if it is also an office, and fittings. Then here fixed capital is also called fixed assets. Dear learners, you can note that that is what we call fixed capital. Fixed capital or fixed assets. That is, then next we have liquid. We have liquid capital. You always talk of capital, but this time around, I want to teach you all this. Liquid capital. Liquid. This is capital, which is already in cash form. Let me say, we are going to start up a cement industry. We already have our land. But what we need is capital. We need 44 or $50 million to start up a cement factory. So the cash we are having, that is liquid. What you have, what do you have to start a business? Or you can be with assets which can easily be converted into cash. Because there are situations where you find that you don't have cash, but it is possible to sell an asset. You have already assets that you can easily sell. So we say that liquid capital refers to the capital of a business which is in monetary form or near liquid assets like government securities. Liquid capital can easily be turned into cash. You can easily turn it into cash. Now, look here. Let's get the difference. Fixed. These ones cannot easily be turned into cash. Liquid, it is already cash, and we have assets that can easily be turned into cash. So you should always start telling people that, for me, I have cash. You have money in your wallet. You have liquid cash, and you have other assets that you can easily sell. For instance, stock. Stock, you have salt. Stock of salt. You have stocked rice. You have stocked sugar. Anytime you can get somebody to and sell it, then you get liquid capital. Good. Then another category, it is human capital. Human capital. How do we acquire human capital? Like for my case, I have human capital. I went to school, I studied. I'm a professional teacher. So everything it is in my head. I have human capital. Just take me in front of students and I teach. Then the following day, you pay me. Don't have liquid, and I may not have fee fixed, but I have human capital. That capital that you attain through education and training. What you have, what you know, the training you have, that is your human capital. Let me hope you are getting me right. Fixed capital. Capital which cannot easily be converted into. Then here, it is cash or capital that you can easily turn, stock that you can easily turn into cash. Human, the ones that we get through training, we become skilled. Then, what is the reward? You can tell me, what is the reward for all this? What is the reward? So the reward is interest. Interest. Whenever they ask you what is the reward for capital, it is interest. Or loss. That's if we go in accounting. So the reward is interest. Then, on the other hand, we talked of land. It is rent. Here, it is interest. Good. Now, let's look at the determinants. Determinants of interest. How is it determined? The interest. Because you have seen, this is what we put in: fixed capital, liquid capital, human capital. Now, what our reward is interest. How is this reward, interest, how is it determined? Good. Now, the first one, we have inflation. We have inflation. My dear learners, who can tell me what's the meaning of inflation if we are the word inflation? What does it mean? Inflation. Good. So it can be the situation where you find a lot of money in an economy when it is purchasing what? Nothing. Too much money in the economy. That is inflation. Then still, you may find when in an economy, when it is expensive, when it is costly, when purchasing something, goods, when the prices are high. So if prices of commodities are increasing, you know I said that goods are inflated. So situation, much money in an economy, but purchasing nothing. Or you need a lot of money to buy a certain commodity. So when there is inflation in a country, the interest rate is high. So whenever you hear that in our country we have inflation, then you just know that interest rate is going to be high. Then, on the other hand, if there is deflation, interest rate will be low. So that is how interest is determined in a situation where there is inflation and deflation. Inflation, interest rate is high. Next, we have government monetary policy. Government monetary policy. So here the interest rate is high. When is it high? If the monetary policy is restrictive. When monetary policy is restrictive, the interest rate is high. Then, another determinant, demand of credit. Demand of credit. Now, when demand for credit is high, interest rate will also be high. Why is it high? There is demand for credit. The interest rate also does what? Increases. So when demand is low for credit, you'll find that interest rate will also be low. Next, we have duration. Another determinant, duration of credit. Duration of credit. The time you go to the bank, let me say you need money. You want for 5 years or 6 years. So you find when the duration is high, even the interest rate will be high. But if the duration of credit, so if I talk of duration, you understand. Duration, time, like I'm saying, the whole period of credit. Period of credit, if it's high, interest rate increases. If it's low, it also decreases. Another determinant, the amount of credit. or you can call it a loan. The amount of credit. Here, big loans are charged high interest rate, while small loans are charged lower interest rate. And as you get here the point. So if you go to the bank, then you need a big loan, then you expect high interest rate. But if it is low, the credit is low, then you will be charged a lower interest rate. Let me hope you are getting these determinants. Now, as I conclude, as I end my lesson, let's see whether we are achieving our objective. Our learning objective, we said that at the end of the lesson, you should be able to explain the factors of production. But here in our lesson 4, we are specific on capital. We said under capital, we have categories under capital. We said that fixed capital, or we said all fixed assets, that's the capital which you cannot easily convert into cash. We talked of we talked of buildings, you normally use equipments, fittings, then liquid. This is already in cash, but even stock, all assets that can easily be converted into money. Then we looked at human capital. That someone who goes to school and is trained, you get that education, and you get skills into a certain profession, you are under human capital. Then we talked of the reward. Our reward is interest. Capital, the reward is interest. Then I remember telling you that for land, it was rent. The reward here, it is interest. I emphasize this because I know you will be asked, what's the reward for land? What's the reward for capital? Capital, it is interest. Then we went on and looked at the determinants. Determinants of interest. Talked of inflation, that where inflation is high, interest rate will also be high. Then talked of government monetary policy. In case the country is restricting, there is restriction for circulation of money, there is interest rate also increases. Then demand of credit. Demand of credit. When demand, let me say people are going to the bank, they are demanding more money. What happens? People, there is high interest rate, but when the demand is low, there is low rate. Then duration of credit. The loan you are taking, if it's going to take some time, let me say someone is taking a loan for 10 years. Another one is taking for 1 year. Then for you, your interest rate will be high. Then this one, the interest rate will be low. Another one, the amount of credit or the loan. Big loans are charged high interest rate. Then people who are taking smaller sums, they are charged low interest. Let me hope we have achieved our objective. Isn't our objective now achieved? It is achieved because this is all about capital. Everything it's there about capital. Then you can take up that work, you can do my assignment. Let me hope it was good and can say bye-bye. Remain Anthony, your economic teacher. Stay safe.